Hi. Let's open up for Q&A. If you have questions for Rick, go ahead and raise your hands and we'll call on you to unmute yourself. You can ask about anything, about hot money lending, about capital raising, yeah, or just any, even questions for me even is fine too. So you have questions, go ahead and raise. Okay.
Hey, Rick, thanks for being on. Can you hear me okay?
Yep.
Yeah, Brandon. Yep.
Awesome, good. You mentioned earlier that you never anticipated having as many employees as you have. Can you talk about how you handled scaling up to that point and what your advice might be for people that are thinking about hiring their first employees?
Yeah, so that's a good and interesting question. As you can tell, the way I raised money was different than most people. I was lucky that I had these employees around and that I was doing the business. When it came to people, it was mostly family and real good friends that just showed up and wouldn't leave. But my business, since we're handling, it's first of all, I just want to say to me, it's a huge honor to be handling the amount of money we handle of people's retirement funds, right? Everyone I know is about within 10 years of my age, right? They can't lose any money, right? I cannot lose their money. It's a huge responsibility. And when I'm handling money, I got to have people I totally trust. I've got a real good friend of mine out in their Carolina Capital. I'm not going to mention her name. But her and her brother had an employee that evidently embezzled about $4 million.
Oh man.
They hired this guy. He was going to be heir to the throne. All he had to do was just, he was going to walk into, they had a $30 million fund or more, and he embezzled this money, and they were fixing to retire in about the next year or two. And now they're not retiring anytime soon. They've got to go, that's $4 million of investment money they got to get back. You've got to be real careful. And the groups we're in, so I'm going to wear the hat. You got to get this hat, Tim, Dealmaker hat. You got to get a bunch of them.
Yep.
So the Dealmaker community is primarily a faith-based community, and that really leads to the right people. But the person that embezzled this money came off as a faith-based person, and he was just as crooked as you can get. So I think if you've been in the business a long time, just because people say that doesn't mean anything. They'll just use it, and it doesn't mean anything. They're just manipulating the situation. But fortunately, that's the exception, not the rule. You got to do the backgrounds. But then even with the background, we had another incident. I'll just say this because there is risk out there, right? There's risk in hiring people. There's risk in title companies. We had a title company last week get scammed on a wire transfer to us.
Oh man.
And it turned out to be a 23-year-old kid they had working for them because we sent the wiring instruction, emailed it to them. They had to call us to confirm. Always, any wire, you have them call you and confirm what they have. Don't you tell them what you sent them. And we were at this event, but they run the wire and they would not confirm. Well, we just go ahead. We're just going to use what you send us. Confirm it. They didn't confirm it. And they ended up sending it to, instead of my bank, Advantial, they sent it to, what was the name of that bank? They sent it to a bank in Alabama. And where's your title? Where was your wiring instructions? They gave us a copy of what was marked up. So they had this, they crossed out everything on the wiring instructions, wrote in stuff, initialed it. So someone in the office took it and put it in front of the closer. And it could have been both of them in on it. But they wired the money to a different account. Fortunately, they were able to stop it after only $5,000 had been wired back out of that account. And the title company was able to get most of the money back, and the owner had to make up the difference. But he was calling me crying, saying, hey, I don't have the $68,000 or whatever it is. I just bought this title company last year. So
Jeez.
got 5 employees and probably 2 of them are crooked. What do you do? So that's a great question because it is a real problem. You got to do the background checks. Hopefully you've got referrals. I won't refer anybody unless I stand behind them, but ideally they're people that you know, but sometimes you've got to take a little bit of a flyer, but your due diligence has just got to be. But the great thing these days, use ChatGPT, ask ChatGPT for all the questions you got to ask because you won't think of them on your own and dig in because depending on what job it is, if anything to do with handling money, yeah, you really, unfortunately, this society wants to hit the easy button, right? And we're seeing more and more of that. So that probably doesn't help you, but that's all I can tell you.
Hope it
No,
didn't
that's
scare you,
great.
Brendan.
I'm not looking to go out and hire a bunch of people right now. Anyway, I'm always curious about how people shift from being a solopreneur to running a team. Were you already a pretty good delegator and good at duplicating yourself into your employees? Was that a skill that you already had, or did you have to develop that?
So it's interesting. The skill that my wife and I have, you probably heard the car dealer analogy, right? In real estate, like a car dealer, you got sales guys, you got the mechanics, you got the stock room, you've got the finance guys, You got all these different skill sets. So you got to wear all the hats when you're first starting your business, right? Most people fail because they can't handle all the hats. They stink at delegating what they're not good at. And they either get trapped or they get stuck, right? So my skills, because I'm a chemical engineer, I'm a math nerd, right? Numbers is easy to me. Deal structuring, I've been doing stuff since 85 in the oil and gas patch. We were deal making. Real estate was just shooting fish in a barrel compared to the multi-billion-dollar projects and all the negotiating with. I did projects in Iraq, Africa, and Russia, and China. So I had 35, 40 years I was blessed to be in these project roles, and I was a jack of all trades and a master of none because I had to wear all the hats. So I was always an all the hat guy, which is also a curse because when you're all the hats, no one can do it as well as I do it, right? And so you got to teach folks, and it takes time, especially in the lending business. I didn't realize it until I got into it. It's harder to teach people how to look at deals, how to analyze deals. And I've got a couple people that are really good, bringing up some others, but it's a struggle. So there's no 9 to 5 in this business. It's start to finish. And unfortunately, it never finishes. Right. So you have to have a passion for it. You have to have a passion for your people to grow. And that's what my wife and I have. Hopefully, we're going to leave a legacy so we can step back in 4 or 5 years and just let the machine keep growing and growing. But you're having to learn and train every day. And sometimes it gets frustrating because it's like football, right? You have to run the drills 1,000 times, but it takes 10,000 hours to master something. And in my space, that's really true. But just investing in general, if you have a knack for it, it was natural to me. But very few people is it natural to. But anyway, that's the curse. When you're natural, you have a hard time understanding why they don't understand it. I have one other little quick saying here before we go on. My old man used to tell me, look, son, I can explain it to you. I can't make you understand it. And that is so true in our business.
Awesome.
Sorry,
Great answers. Thank you so much.
Thanks, Brandon. Yeah, and just to add to that, when it comes to hiring your first employee, the 2 jobs that I find the easiest to outsource are one, any kind of administrative work, like because those work are just mostly busy work. They don't move the needle that much. Those are the easiest to hire. And then marketing is the other one that's also super easy to hire. A lot of young kids these days are very good with social media marketing, graphic design with Canva and all of that stuff. So both of those items are very easy to outsource without them touching anything with your bank account or anything that can put you at risk. And yeah, so I would say those would be the 2 areas that if you're looking for your first assistant or virtual assistant, those are the 2 areas you should look at. All right. There was someone else that had the hand raised, but I see Jeff Cassell sent in a question. Do you use the 10-year or 5-year to price loans?
It's a great question. It depends which. So DSCR loans play off the 5-year treasury yields. Your conventional loans play off the 10-year. And what is interesting right now is that a DSCR loan, right? So this is basically a no-doc loan. A DSCR loan, same down payment, same FICO score, same tier 1 level borrower. The DSCR loan is almost the same now as a conventional loan for a homeowner. But for a conventional investor loan, DSCR loans are about 0.5% lower right now. So it used to be the other way around, but the DSCR loans have gotten so competitive. Unless your property doesn't cash flow, there's no reason not to get a DSCR loan. And there's the prepay too. So if you just don't want to jack with the prepay, but your lowest loan with the least amount of aggravation, the DSCR loan. But the DSCR is priced off the 5-year. Conventional is priced off 10.
All right, Jeff, hope that's answered your question. Is it mostly Wall Street that's backing these DSCR loans, or who are the major guys?
Yeah, so the major hedge funds are out there, but there's a really good secondary mortgage-backed security market for the DSCR loans. That was the problem initially when they got started. These guys were setting up these institutional buyers, and then they would flake out or whatever. So people would get their butt kicked and then start again. But now there's a very mature market for this. So there's different players along the line. There's the guys that do some aggregating. They sell off to like the Torax and stuff, and then they all bundle stuff and then sell it as bigger mortgage-backed securities. So that market is pretty mature now, and that's why things are so competitive, and there's been a learning process for investors. But that's why DSCR loans, there's guidelines, you got to fit in the guideline box. You can't sell that loan, you have to eat it. Nobody wants to eat a loan. Every once in a while, we just got a loan that you got to say no, and People will get mad sometimes if you can't finance something, but look, I don't make any money if I don't finance it. If I can't finance it, it's probably not financeable. But every once in a while, things happen. But
I see. Okay. I don't see any other questions, so we'll go ahead and wrap up our interview for today, and then we'll put you guys into your breakout session here. Rick, again, thank you so much for being on our show today. Really appreciate you. It's been an honor and a huge blessing to have you on our show to talk about how you got started and how you raise money and how you run your hard money lending business. Thank you so much.
yeah, my pleasure.
Yep. Hi, everyone. Let's turn on your cameras real quick. We're gonna take a group picture with Rick, and then we'll put you into your breakout room. Okay, turn on your cameras. All right. So Rick, we flex to take our pictures on the show. There you go. There you go. Are you guys ready? 3, 2, 1. Yay.